Bitcoin millionaires increased 140%. The story of crypto bull run. Hey everyone, welcome back to CashKey, where we bring you the latest updates and insights on cryptocurrency. Today we will talk about the story of Bitcoin's latest bull run. Bitcoin's price broke above $25,000 on February 21, but suffered a 10% drop after being rejected at that level. Regulatory pressure from the US was cited as a factor contributing to the market downturn. But what caused the bull run in the first place, and how did Bitcoin recover from the setback? Stay tuned as we dive into the details and explore the factors behind this exciting time in the crypto world. The story of Bitcoin's latest bull run is a roller coaster of events that have kept crypto enthusiasts on their toes. As we mentioned earlier, the rally began on February 21st when Bitcoin's price broke above $25,000. At this point, it seemed logical that the rally would continue, given the impressive retail sales data from the previous week that surpassed market consensus. This fueled investors' hopes for a soft landing and a possible averted recession in the U.S. economy. However, the cryptocurrency markets took a hit soon after, as Bitcoin's price plunged 10% between February 21st and February 24th. Regulatory pressure from the U.S. was cited as one of the main reasons for the worsening market conditions. Securities and Exchange Commission Chair Gary Gensler's comments on everything other than Bitcoin potentially falling under the agency's jurisdiction raised concerns among crypto investors. Furthermore, U.S. Treasury Secretary Janet Yellen's call for a solid regulatory framework for cryptocurrencies added to the market uncertainty. Despite the regulatory challenges, Bitcoin's price has shown remarkable resilience. The global stock market reacted positively on February 27 after the U.S. Commerce Department reported weak economic data, putting pressure on the Federal Reserve to reduce its interest rate hike program earlier than expected. As a result, Bitcoin's price has gained 4.5% since February 25th, indicating that the impact of the regulatory news flow has been limited. Interestingly, Bitcoin's 50-day correlation with the S&P 500 futures currently stands at 83%, indicating a strong link between cryptocurrency and risk asset prices. This suggests that the macroeconomic scenario is pivotal in determining the overall trend. It's worth noting that the story of Bitcoin's latest bull run is not just limited to the U.S. market. Asia-based stablecoin demand is stagnant, and Bitcoin's futures premium is stuck even after the price rejection at $25,000. However, Bitcoin's quarterly futures remain the preferred instruments of whales and arbitrage desks due to their settlement date and price difference from spot markets. While regulatory pressure remains a concern, Bitcoin's resilience and strong correlation with risk asset prices offer hope for a continued upward trend. It's an exciting time for crypto enthusiasts, and we'll be sure to keep you updated on any new developments. Okay friends, now let us talk about the factors involved in this bull run. There were several factors involved in Bitcoin's latest bull run. Firstly, the U.S. retail sales data from the previous week greatly surpassed market expectations, leading investors to believe the U.S. economy may avoid a recession. This fueled hope for a soft landing and a positive outcome for risk assets such as stocks, commodities, and Bitcoin. Another factor was the potential success of the U.S. Federal Reserve strategy, which involved increasing interest rates and scaling back its balance sheet reduction without significantly damaging the economy. If this strategy succeeded, it would benefit risk assets, including Bitcoin. However, the bull run was not without its challenges. Regulatory pressure, mainly from the U.S., partially explains investors' rationale for the worsening market conditions. For instance, in a New York Magazine interview, SEC Chair Gary Gensler claimed that everything other than Bitcoin is potentially a security instrument and falls under the agency's jurisdiction. This led to concerns among investors about potential regulation and its impact on the cryptocurrency markets. The U.S. Treasury Secretary Janet Yellen stressed the importance of implementing a solid regulatory framework for cryptocurrencies at a G20 meeting. Her remarks followed the International Monetary Fund Managing Director Kristalina Georgieva pointing out that if regulation fails, then outright banning should not be taken off the table. Despite these challenges, Bitcoin's futures premium remained stuck, indicating a sustained demand for the cryptocurrency. Furthermore, weak economic data shifted control to the bulls, leading to a 4.5% gain in Bitcoin's price since February 25. In short, the latest bull run can be attributed to a combination of positive economic data, the potential success of the U.S. Federal Reserve strategy, and sustained demand for the cryptocurrency. But regulatory pressure and possible regulatory action remain a concern for investors in the cryptocurrency markets. Now let's talk about this latest wave of crypto millionaires. Bitcoin's latest bull run has created a new wave of millionaires. According to on-chain analytics firm Glassnode, when the price of Bitcoin crossed $20,000, over 67,000 Bitcoin wallets were worth $1 million or more. The $20,000 price tag is more than just a technical and psychological line in the sand for Bitcoin. When BTC/USD crosses that price point, many holders gain or lose US dollar millionaire status. In late 2022, when Bitcoin fell below $20,000, the number of millionaire wallets plummeted overnight. However, fast forward to January 2023, and the opposite can be observed. As soon as BTC/USD reclaimed the $20,000 mark, those wallets reappeared en masse. On January 14, with BTC/USD trading just $1,000 higher, wallets with a balance worth $1 million or more increased from 27,000 to 65,000. Moreover, the number of whole coiners, wallets with a balance of at least 1 BTC, continues to track toward the 1 million mark for the first time in Bitcoin's history. Hodlers' fortunes have increased dramatically in the first months of 2023, with long-term and short-term holders refusing to cash out. This latest bull run has indeed been a game-changer for Bitcoin investors. I think that's enough for today. We will be back with another exciting video very soon. Until then, take care of yourself.